Welcome to Money Talks.
We at DICT and NTC are just awaiting clear instructions to proceed, and we will start crafting the IRR.
The Philippine Chamber of Telecommunications Operators make a final push to express their opposition. Attorney Roy Ibay, Vice President of the PCTO, joins us live. And the government's outstanding debt jumped to a new high of 17.27 trillion pesos by the end of June. We get some insights from Alex Escucha, fellow of the Foundation for Economic Freedom. DICT Secretary Henry Aguda says the Konektadong Pinoy bill landed on the president's desk last week and is confident he will sign it into law very soon. In an interview on Thought Leaders, Aguda told me the bill had passed through rigorous consultations. Here's an excerpt from that interview.
So, what's going to happen?
Why do you think that he hasn't signed it yet?
Well, he got it just recently, and I think they're focused on the SONA. And you know, the past week, we've been dealing with 3 or 4 typhoons. And then compounded by the fact that he just came from the US. So it's been a very busy 2 weeks for the president. But I think in the next coming week, Secretary Balisacan and myself already endorsed the signing of the KP bill, and we're just awaiting the official announcement before we proceed with the other activities.
But there are the contrarians.
Oh, yes.
The ones from the Philippine
Yes.
Chamber of Telco Operators.
Yes.
They've warned time and again that the KP bill could create, number one, an uneven regulatory environment and national security concerns.
Well, let's tackle the national security concern. I think there may be some explanation that I need to do for those who may have read the law differently. There's a question of cybersecurity compliance. Every player, old or new, must comply with cybersecurity requirements of both the DICT and other agencies. Now, the law requires another level of cybersecurity compliance, which makes it actually more cybersecurity robust. Within 2 years, all the players would have to get an international cybersecurity certification. One of them would be ISO, and this is a new requirement. So it actually strengthens cybersecurity. On the national security aspect, on whether a foreign telco can set up shop without going through the cybersecurity requirements, or not even have their own infrastructure, that's not in the law. The law emphasizes that any foreign company that comes over has to follow the Public Utilities Act, as at the same time the Foreign Investments Act. So those things I've explained to some of the oppositors, and you know, they recognize that, oh yeah, mapapaliwanag pala. The other issue on franchise, there will be no 2 types of regulation. The government always maintains it has to be a fair playing field, fair for both the new and the old. So those with current franchises, they don't have to worry. Their franchises will be intact.
And that was DICT Secretary Henry Aguda speaking to me earlier on Thought Leaders. Catch the full interview on August 7, only here on One News, live streamed as well on our Facebook and YouTube channels. Dissenters are not done yet. The Philippine Chamber of Telecommunications Operators warn the version passed by the bicameral committee could lead to national security vulnerabilities, weaken regulatory oversight, and destabilize the telecommunications sector in the long run. With us now for more is PCTO Vice President Attorney Roy Ibay. Good to see you, Roy. Welcome to the program.
Good morning, Cathy. Good morning to our televiewers. Isang magandang umaga po sa inyong lahat.
So you've heard it there, 100 days into office, the Secretary himself speaking about the KP bill. How is it that the final version of this bill still had what the PCTO terms as unresolved risks when it landed the BICAM committee level?
Yes. First of all, the PCTO would like to clarify that first and foremost, the PCTO supports the call of the President for universal connectivity. We support the Digital Bayanihan program of the President. And of course, we support his call for a fast, reliable, and affordable internet. Our reservations is that, as I was listening to the recap of your interview, snippets of your interview with the Secretary Henry, we agree that there is a 2-year safeguard in terms of the security audit, especially for the satellite technology. But actually, this has been watered down in the BICAM. In the original third reading copy of the Senate, this was only for after 1 year. These players would have to already undergo a cybersecurity certification. So medyo na-watered down pa siya from 1 year naging 2 years. And we feel that extending this by another year, in fact, yung 1 year nga dapat immediately before they even start to commence, they should undergo cybersecurity certification already. Kasi alam mo, I've been working with the CICT for the CICC for the past 2 years already, and every day there's a cyber war happening and ongoing. So a single day that passes that makes your network porous and very easily to be penetrated by malactors and threat actors can cause a lot of havoc. In fact, we all know that for the past 2 years, a lot of government institutions have already been hacked. A lot of private sector companies also have already been breached. And this has caused not only millions, but billions in terms of damage, reputational damage to our country, and really a lot of unaccounted damage also to our economy.
Roy, to your point on the watering down, na mas na-watered down pa, what insights can you share on the process? Because as I spoke with the Secretary himself, he said you had gone through rigorous consultations.
No, actually, there were 2 versions. First of all, what we would like now that the Secretary updated that the bill is actually now in Malacanang awaiting either the President's signature or veto, or he may just let it lapse into law. Our appeal is like similar to the SIMREG bill when it was first brought to the past President Duterte's attention in 2022. It was vetoed then by President Duterte because the first version, which was submitted to him then back then, included that you had to register your social media profile. So it was not a very good version. So he vetoed it and asked Congress to immediately just rectify, clean it up, and then it was sent back again. And then the second version was already signed. Our apprehension is that the 2 versions, the Congress version was the version which since the 16th Congress we've been working on. And when the Congress passed it, this was brought up to the Senate. But this was not the version that the Senate took up. The Senate took up a later drafted version by the NEDA and the Philippine Competition Commission, which was totally different than the one that Congress passed.
So now that it's on the President's desk,
version,
Roy, what would you like the President to do then? Ngayong nasa lamesa na ng Presidente, ano ang gustong mangyari ng PCTO?
Kasi Cathy, ang veto kasi pag regular bill, hindi pwedeng line by line yan eh. Sa budget lang kasi pwedeng gawin yan, tsaka sa mga tariff bill. So, ang pwede lang gawin talaga ng Pangulo ay i-veto niya entirely, send it back to Congress, at sana naman, this time, makasama naman kami sa proseso at makonsulta. Kasi kami naman yung talagang mga stakeholders na maapektuhan talaga nitong Konektadong Pinoy Bill. So, ang sinasabi naman namin, hindi naman masama entirely, but it could have been better if they could have considered also inputs from the sector itself, from industry, para naman napaganda lalo.
Correct. At ang nasabi nga ni Secretary Aguda, hindi lang to kasama doon sa excerpt kanina, ano? Sabi niya, he's pledged to give the PCTO some wiggle room in the implementing rules and regulations, and he promised collaboration with all stakeholders.
Well, actually, we all know, no, the IRR really cannot rise above its source. Eh. So, if a law has some flaws, then an IRR cannot really cure whatever flaws that a law has, no, in entirety. So what we ask really is, if it's still possible for the president to consider our plea that it be sent back, redrafted to include also our inputs. Oo, kasi yun nga, aside from yung national security, we feel that it introduces a lot of unfair rules. Eh. For example, one section talks about technology neutrality, but then again, it opens up or it gives so much preference to satellite because in the law, it says that the satellite providers don't even have to register, they just have to file their agreements, whatever agreements they have with the DICT and the NTC, and they don't even have to coordinate as regards to spectrum. And this could be a violation of our international treaty on radio regulations, which we are signatory to with the ITU. And again, no, the ITU provides that any satellite should do local coordination with the regulator. But in this law, it's absent. It doesn't provide that. In fact, they removed the third reading version of the Senate provided that they had to coordinate with the NTC. In the final BICAM, they even removed that. They removed that requirement that they coordinate with the NTC as regards spectrum provision.
Whether or not it's vetoed, Roy, babalikan din natin, no, the spirit of this bill is really internet for all, for everyone, even doon sa mga remote areas, sa mga geographically isolated and disadvantaged areas. How would you address then what the Secretary had said, that stiffer competition could be only good for the consumer in us all?
Again, let me clarify. We are totally in support of competition. We are totally in support of, again, better universal connectivity, faster, reliable, affordable internet. What we are calling for is the same rules, same protection, same safeguards for all. Because, for example, how can you even say that it is the same when in the transitory provision of this law, it provides that duly enfranchised players will retain all their rights and privileges except any provision that will address data transmission. So, tinanggalan kami ng rights and privileges over whatever inherent provisions that is contained in our franchise, basta data transmission. Kasi this bill daw will now govern data transmission. That is unconstitutional because a franchise is already considered a property right, and removing this inherent granted and already enjoyed privilege of franchise holders will now be rendered ineffectual or ineffective under the new KP bill.
All right. Well, update us na lang kung ano pong nangyari doon sa nasa President's desk on the Konektadong Pinoy bill. Thank you so much, Attorney Roy Ibay
Thank you,
of
Cathy.
PCTO. And Digi Plus shares has risen by over 11% Tuesday after President Marcos made no mention of online gambling in his SONA. a silence that analysts say helped ease market fears of a ban. AP Securities head research, Alfred Garcia, said investors took a, quote, no news is good news stance, though he warned tighter regulation is likely. DIGI Plus is the operator of Bingo Plus, Arena Plus, and Game Zone. For his part, Senator Erwin Tulfo, newly minted chair of the Games and Amusement Committee, says he will call a hearing next week amid rising concerns over lax online gambling rules. For his personal stance, the senator said online gambling must be stopped.
Kung ako po masusunod, ora mismo dapat itigil na ang online gambling. Because of the fact, masama na po ang nangyayari. May mga bata na hindi na nag-aaral. May mga pamilya na naghihiwalay. May mga baon na sa utang. Hindi na umaabot sa bahay ang sweldo. Naghihiwalay ang pamilya, nag-aaway-away. May mga karamihan hindi na nagagawa ang trabaho. Take the case of that lawmaker na nahuli, nag-online sabong. We have to stop this.
A new July survey by Okta Research shows President Marcos's trust and performance ratings improved, while Vice President Sara Duterte's ratings declined over the same period. According to the latest Tugon ng Masa survey, Marcos's trust rating rose 4 points to 64% from April's 60%, reversing a downward trend since late last year. He also scored the highest approval and trust ratings among top officials for the second quarter of 2025. In contrast, Duterte's trust rating fell to 54%, while her performance rating fell 6 points to 50%. The survey was conducted over a week before the president delivered his SONA. That's from July 12 to 17 through face-to-face interviews with 1,200 adult respondents nationwide. And you're watching Money Talks. Coming right up, the government's debt has hit a new high. Catch our conversation with Alex Escucha, president of the Institute of Development in Econometrics Analysis. Keep it here on One News. And welcome back to Money Talks. I'm Cathy Yang. U.S. President Trump issued a blitz of tariff announcements as the new rates take effect tomorrow, August 1st. Trump charges Brazil with a 50% tariff, with exceptions in sectors such as civil aircraft, aluminum, energy products, and fertilizers. A hefty rate is a form of pressure to drop charges against Brazilian ex-president Jair Bolsonaro, who, like Trump, is being tried for attempting to overturn the results of his election loss. India is facing a 25% levy, which would just be 1 point lower than Trump's first threat of 26% back in April. He would also impose a penalty tariff on New Delhi for purchasing Russian oil. And just this morning, Manila Times, South Korea walked away with a 15% duty. Part of its deal will be a $350 billion investment in the U.S. and a $100 billion purchase of American energy products. As expected, the Federal Reserve kept interest rates steady. What's unexpected is the descent of two central bank governors, a first in over 3 decades. Officials maintained the benchmark policy rate in a range between 4.25% and 4.5%. The Fed attributed its decision to moderate economic growth in the first half of the year, solid labor market conditions, and elevated inflation. But for the first time since 1993, two policymakers dissented from the decision, opting for a 25 basis point cut. They are Christopher Waller, a governor, and Michelle Baumann, the vice chair for supervision. Both are Trump appointees. Powell said it's still early to assess whether to lower rates come September, but the president is already criticizing the status quo. Meanwhile, the U.S. economy rebounded in the second quarter, growing by a seasonally adjusted 3%. That is up from a contraction of 0.5% in the first quarter. But taken together, GDP only grew by 1.2% in the first half of the year, down from 2.5% in the same period of last year. U.S. stocks have ended Wednesday's session mostly lower as the Fed made no decision whether to cut interest rates in September. The Dow fell by 0.33%. S&P 500 slid by 0.1%, and the Nasdaq rose by 0.1%. As for the benchmark 10-year Treasury yields, they've ticked up following the Fed's decision, settling at 4.377%. Gold prices, however, declined to $3,295 per troy ounce. U.S. futures point to gains when the markets open later tonight Manila time. The Dow rising 0.1%, S&P 500 climbing by nearly 0.8%, and the Nasdaq ticked up by over 1%. Let's take a look at our own markets here in the Philippines, with the PSCI opening this Thursday lower, extending declines by about 0.1%. 6,314 still well above the 6,300 mark. Stock market extended its losses a 5th straight session, driven by cautiousness among investors as the August 1st tariff effectivity looms, according to PhilStocks Financial. The broader all-shares index slid by 0.1%, and the sectoral gauges were a mixed bag, with property leading gains and financials leading losses. Let's take a look at the Philippine peso. It opens weaker at 57.86 to the dollar. Peso closed yesterday weaker just as well at 57.58 against the greenback. And the 10-year government bond yields have ticked down to 6.21% from the previous close of 6.223%. And the government's outstanding debt jumped to a record high this June, now at 17.27 trillion pesos. The figure marks an 11.5% rise from 15.48 trillion pesos in the same month of last year. Month on month, the debt inched up by 2% from May, driven by strong investor demand for government securities. Despite the increasing debt, the Bureau of Treasury said it remains sustainable. In our continuing conversations post-SONA, our next guest says the president's public rebuke of lawmakers was, quote, one of his most impactful lines last Monday. With us now for more is the president of the Institute of Development and Econometrics Analysis and chairman of the UP Visayas Foundation. He's also a fellow of the Foundation for Economic Freedom, Alex Escucha. So good to see you, Alex. Welcome to the program.
Thank you for having me.
All right, let's take it on from debt. A record increase there on debt levels, but the more important metric, and I think you would agree, is the debt to GDP ratio, because the finance secretary often mentions that that is what we have to watch out for. It did make a mention through the palace that 70% would be the new benchmark, even as the rule of thumb is at 60%. What do you make of it?
Well, the 70% was actually, we hit a high of 74%.
We did,
in
during
2005, during GMA's term. I know that for a fact because I was president of the Philippine Economic Society
And we had
that
the
year.
EVAT.
And that triggered the increase in the VAT from 10% to 12%, for which Senator Recto paid for with his Senate seat in the next election. And he did support that despite knowing the risk of doing that. But I wrote an article in Business World just on that. The absolute amount of the debt is meaningless by itself. It has to be in relation to the size of the economy. And from 70% plus in 2005 it has actually steadily declined all the way to during GMA's term and Pinoy's term. In fact, during Pinoy, we got this the investment grade sovereign credit rating and hit a low of 39% in December 2019, just before the surge in the spending because of the COVID pandemic, which brought it back to about 65%. It's now at 60%. Then let's zoom out of that picture. The whole budget process, from the big picture is the Ambition 2040, which was crafted during Pinoy's time. And from there, there's every administration crafts a 5-year development plan. And so for this administration, 2023 to 2028. And then based on that, the Development Budget Coordinating Committee crafts a 5-year macro fiscal framework with revenues, expenses, spending, deficit, and of course, borrowing. So I'm not surprised because in fact we should be expecting that the amount of the debt should be increasing every year because we have an annual deficit
But you want to make
of
sure
about
that
1.2 trillion per year.
correct, but you want to make sure that that debt is sustainably paid. But with
Yes.
concerns
So,
with the way that
if
at
you
least
look,
the government
my
is
analysis
spending,
of the last 10
there
years,
is some concern in the flood control projects, and that's what I wanted to get to.
Yes.
Because in SONA, there was a public rebuke.
let's
And a shifting dynamic, if you will, between
Excellent.
the executive and the legislative.
Yes.
Do you think that that shifting dynamic is real, or is it just pure optics?
both. Let me unpack that two ways. On the debt side, we have analyzed the structure of the debt. One is that the ratio, according to the 5-year fiscal framework, is that it's supposed to go down to around 55% by 2028. We're still on track with that. Number two, is it sustainable? It is 80% domestic and 20% foreign. It is 70% long-term, meaning 5 years or over, and only 30% shorter term. In short, just like when you borrow for a housing loan, the initial amortization is heavy on the first year. But as your income grows, you actually get to forget about it after 3 years, right? So if your economy is growing, then the debt so the real number to look at is the debt to GDP ratio. So the goal is still to maintain it under around 50% or 60 or 50%. I actually don't know where that 70% goal is coming from. I mean, it's not, that announcement is actually unnecessary and unduly alarming. So
And the optics? Yeah, we can leave that out, but the optics. I mean, at what part of SONA was just pure optics?
Well, if we have to focus on only one thing, it is the mahiya naman kayo. Okay. But let's unpack that for a moment. But because based on the analysis of the last budgets for 2023, 24, and 25, while people were just reacting to the 2025 budget as the most corrupt of all, it turns out that a review of the BICAM results from 2023 to 2024, the reallocation from the NEP, the National Expenditures Program, already started in 2023 for a total of 1 trillion pesos, of which 245 billion was in the flood control projects. Okay, in fact, as Senator Ping Lacson in a newspaper article, and I have this printout here, for the last, since 2011, flood control projects was about 2 trillion, and probably 1 trillion of that was lost. And yesterday, the DPWH secretary said the floods were unpreventable because of the silting of the rivers. But by definition, flood control includes dredging. So Senator Lacson said, at the rate of the spending of 350 million a day, we could have brought a dredger every single day to pay for that. So, And then, in today's newspaper, the DPWH secretary said, we have no control and we have no way of monitoring those flood control projects which were inserted. Remember, these were inserted and not requested by DOTR or by DPWH. And therefore, by definition, and he said so, it was not subject to any engineering studies, any feasibilities, including right-of-way issues.
Okay.
So that's where it is.
It is, and a lot more to unpack. Definitely we'll have you back, Alex. There's just so much to talk about
Yes.
and the review. We're waiting for that review and the assessment and get more to unpack.
Yes.
Thank you so much. Alex Escucha of the Foundation for Economic Freedom. And Finance Secretary Ralph Recto has sealed a deal to bring UK fintech giant Revolut into the Philippines. Recto says this came from sustained investor talks across London, Davos, and Manila, turning pledges into reality. Revolut's upcoming Manila Tech Hub will be its second in Asia, following the launch of its first in India in 2021. The move is expected to boost digital jobs and tech capabilities, with Revolut calling the Philippines a young, talented, mobile-savvy market. The fintech giant operates in major Asia-Pacific markets, including Japan, Australia, Singapore, and New Zealand. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.